I have been trading for over 4 years, and it took me 2 years to master my scalping strategy. And this strategy now makes me $2,000 per day. And in this video, I'm gonna actually prove to you that the strategy works. I'm gonna take a trade in front of you. Think about it. I'm gonna literally go into the live markets, because unlike all these fake trading gurus who will just yap and teach, who never show results, I'm gonna take a trade in front of you in the real live markets with my money. Let's get into the markets, take a trade, and then after that I will teach to you step by step. Let's go. I just bought on NASDAQ. I'm looking for the price to go up. We have this all-time highs respect of the trend, but I'm gonna only target like 1 to 2 reshort ratio trade. All right. Yo, net PNL, meaning that what I actually made, and this is the PNL. So after the fees, I made like 1.9K. Super nice, super simple. How did I do that? Look at this. What is this? This is an option, right? If you look at the higher time frames, 1 hour is actually bearish because we close below that, but it doesn't really matter. Why? Because if you look closely, 4 time frame is bullish, everything is bullish. We literally have this fair value gap right here, and we just continue to respect this pace. We're in an uptrend in the 4 time frame, daily time frame. Daily time frame is in a very, very nice uptrend. High highs, high lows, high highs. And the more high highs, high lows we see, the better, obviously. But right now, we're gonna focus on this moment, obviously, as day traders. Session opens at 9:30 a.m. Eastern Standard Time. Normally, I don't trade on Mondays because there's no volume. But today, we saw this huge session open candle, which indicates that, holy shit, this is freaking nice. And we continue that pace. Then we took out this high in the 1 hour time frame. Actually, this is a 4 hour time frame high as well. So that's a lot of liquidity. So it's a fake out. A lot of the people shorted the markets right here got fucked, essentially, okay? But we don't do that. We don't enter immediately off of liquidity. We gotta wait. We see this rejection candle push up, meaning that buyers are still in the markets, pushing the price up. And this was just a high highs, high lows, and high highs. Broke structure right here. And that's good enough for me because this is super. We'll see from these candles that the buyers are literally in the markets. Size of the candles, the consistency of the candles, everything is on point. All right, so that is the recap. And now I want to actually show you how to actually take that trade every single day with these trends, because I didn't explain whole a lot. So let me actually show you step by step how can you follow the trend. In the markets, there are 2 kinds of trends that you need to see. Okay, consistent movements, uptrend, high highs, high lows, high highs, high lows, high highs, right? That is the movement of the uptrend. And then there is the downtrend, low lows, low highs, low lows, low highs, low lows. And the reason why we need to follow it is because it's like the wave in the ocean. You don't want to go against it. You want to actually ride the wave, go with the wave in a flow mode, okay, if that makes sense. Because obviously, okay, it's going to be a lot harder if you go against this. You're not going to make a lot of money if you go against it. Unless there's a MSS, which is through liquidity, but different kind of topic. Now, how do we follow this trend? It is very simple. Look at this. In the trend, there's 2 parts that actually makes the trend. There is a big move right here and a small move, okay? So in the big move is called an impulse. The small move is called an retracement. As you saw today, the price went up, took liquidity, which is higher time frame highs, okay? Liquidity can switch direction, but it didn't this time. It actually caused the price to retrace and then continue the cycle of trending. Higher highs, higher lows, higher highs. So remember, impulse, retracement. What is here? Impulse, retracement. Impulse, retracement. So essentially, up candle, down candle. Okay? The retracement is the down candle. The reason why that is important, because look at this. Look at this. Impulse, retracement. After an impulse, there's a high, because a high takes 2 candles. Up candle followed by a down candle. What is this? Up candle followed by down candle. So that is a impulse retracement. Above that is a high. Right here, high. What is this? High. Why is it important? Because after that, what happens next is very important. You need to see an up candle body, the fat part of the candle close above that high, which allows us to see a BOS, breakout structure, which is literally, the more we see that in the trend, is the better, because that literally shows us that the price is willing to go up. It is making high highs, breaking structure, breaking structure, breaking structure, and moving in that cycle of trend. High highs, high lows, high highs. High highs is here now because it broke structure. And what I did in the trade, I entered trade from here, put the stop loss up, below the most recent down candle, because the down candle the down candle before the break of structure is essentially our order block, which I like to use as shields. And as you see, I entered from here, and since we had no liquidity to target to, I just had a 1-to-2 risk-reward ratio trade. Look at this. High, retrace, break of structure, and just 1-to-2 risk-reward ratio trade. Okay, naturally you should risk less during these times because there's no liquidity to grab onto. But since this trend was super strong, this is like perfect example. That's why I was like, okay, this is very appealing, very obvious. We disrespected this liquidity, which means there's so many buyers in the markets. Very nice. And actually, I'm going to buy right there. Okay. And in the downtrend, if it would be a very strong downtrend, what can I do? Same stuff, but to the downside, right? Remember, big move, impulse, small move, retracement. What happens after that? There's a low, right? And when a low appears, you have to wait for the down candle body after that, or somewhere there, wait for a down candle to appear that will close, not move, or it has to literally close below this most recent low. Remember, the most recent low matters, okay? It matters in the trend, right? So when that closes below that, this candle closes below the most recent low, that's a break of structure to the downside. I'm not trying to make it too complicated. This is actually very simple stuff, but you have to also understand which kind of price action should you trade. I normally don't trade on Mondays because it has shit price action, but today we had an amazing price action. We just see this respect to the upside. But then below this down candle, when the break structure happens, you can then enter and target your risk-reward ratio, or normally you should target liquidity in the higher time frames, which is literally highs and lows in the higher time frames. They will hold liquidity, right? You should target those because they can switch the trend direction. Obviously, stop loss above the most recent up candle before the break of structure. That is the order block right here. Okay, and this is the down candle before the break of structure. So that is the order block right here in the uptrend. Okay. Right here, and stop loss below that. Okay, very simple stuff. Make sure to actually trade this in the right market condition. That's how you'll make the most money. Okay, make sure that there's the consistent trend, the consistency in the direction of the trend, and obviously the volume, etc. Trading the session open. I trade at New York Stock Exchange open. But man, if you like this video, make sure to comment down below, like, subscribe, and yeah, man, if you actually want my guidance personally, then I will be happy to mentor you. Not everybody can make it to the mentorship, but click the first link in the description if you want to apply. But man, peace out. Thank you for watching. As usual, I will see you on the other side. Peace out.